A1 Trading to Tower, you are clear for takeoff. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Good morning, everybody. Welcome back to another live stream. Out with October and in with November. November is space themed. It's going to be fun. We always have a lot of fun in November with just our theming. And you saw the kickoff with the rocket launch. That's pretty cool. What they did behind the scenes here. Pretty cool stuff. The producer did a good job with that. With that said, we have got a lot to talk about here. We are kicking off a new week, kicking off a new month, and going into kind of the final stretch of the year here. When it comes to stock indices, we know there are some seasonality things that can be quite strong in markets during the months of November and December. We'll definitely be talking about that. Also talk about the dollar index, which we hit kind of this longer term level of resistance that I have been eyeing up on the channel for a little while. A move back to 100, and we are pretty dang close to tapping that 100 mark. Triple digits for DXY. Bulls still kind of pushing along here. And again, it's just an interesting thing the way this takes place. Everyone kind of convinced, oh, US dollar is going to crash and rate cuts and it's going to go to nothing, right? And then beautifully, the market bottomed on the announcement of rate cuts. This has happened a couple of times. This is as bizarre as that sounds. It's not actually that uncommon in markets for the market to find a way to bottom on news. So what actually happened is we sold the rumor and bought the news, right? And so I've been bullish on the dollar since around here. With this move here, I'm taking some profits off the table. I've been mentioning when it comes to the dollar, I made some very nice profits on the UUP trade. I am still long dollar Swiss franc, and I still think that this could also, in the short run, negatively impact gold. Beautiful thing about markets, though, I made a post about this morning about how basically long run, it doesn't matter if you are, right or wrong where the markets go next, because everyone is right and everyone is wrong at times. So I have this bearish idea on gold that I've just taken on this morning. I have a small short position, and if I'm right, I'll make some money. If I'm wrong, I'll lose some money. But it has little to nothing in terms of an overall impact to how my portfolio does in the long term. Let's call it a 50-50 shot of whether or not gold moves down or up in the short run, right? I can never tell you with certainty like, oh, the dollar is going to do this, or I can never say, SP500 is for sure going to do this. I repeat this over and over and over on my channel because people, they don't seem to get it and they get themselves into trouble because they believe they know what's going to happen. Dollar index is hitting some key resistance, but we don't know if this is going to turn lower, right? This thing could fly right through. We could go right on up. Like, let me give you an example. If Trump and President Xi come to a final agreement and the trade deal is put to rest, this thing is going way higher, right? Because again, it's very simple. It's simple math. We sold off on tariff fears. If tariff fears are truly taken away, dollar index has a lot more upside. The problem is we also don't know if things are going to worsen, right? So dollar index could go way lower. So the point is, you might say, well, then what's the point of trading if we don't know what's going to happen? Well, that right there is the fundamental misunderstanding that most retail traders don't get. You don't have to know what the market's going to do next to make money. Now, you do if you're gambling. If you're like, oh, I'm going to put on a huge size and dollar index has got to go lower, and if it doesn't, that's not like trading with an edge. Trading with an edge means, okay, I think dollar index is going to go lower, or I think it's going to go higher. It doesn't matter which way you think. Whatever you think, though, you have a small enough size that it's like a small little tiny little hit if you're wrong. Now, if you're big size and like, I know it's going to go lower, it's got to go lower, and you've got tears in your eyes as it goes higher, yeah, that's not going to end well. That's not how trading works, right? That's gambling. That's Casino Royale until it all blows up. So we risk small, and when we're right, we make it count, and when we're wrong, we admit it, right? That's the other thing. A lot of people, when they're wrong, they won't admit it. They'll say, no, it's trust me. And that stuff ends poorly as well, because usually what that means is you reflect it in your position sizing. You know, instead of admitting you're wrong, you go, you know, all out and blow up along the way. Anyways, speaking of a market just made everyone look wrong here in recent times, it's the NASDAQ. I mean, I can't tell you how many times I've seen people say, you know, we're going to crash, we're going to fall apart. And here's the shocker of it. Here's the kicker of it. They're all right. They are all right. Everyone who said stock market's going to crash, they're all right. It's just the problem is they may have been early. And in trading, early means wrong. Just early means wrong. Like if you have been saying, you know, stocks are going to crash, eventually you are going to be right. The problem is it doesn't matter if you're right that stocks are going to crash eventually if you just short the heck out of it the whole time up and just blow money into the market, right? If you were so right, then you'd say, okay, well, I think it's going to crash eventually, but in the meantime, trend is up, so I'm going to ride that long. We call that cautiously bullish on this channel. Chris Pulver and I, when we talk about stocks, we kind of mention that when the market's running higher, you can't fight it because, again, it has been for 20 years a devastating short to try and short the NASDAQ for 20 years. Does that mean the top is here? Gosh, how many people have thought they knew the top was in, right? It's just not something I'm going to try and time. So with that said, S&P 500, NASDAQ, Chinese stocks, I mean, we still have bullish setups when it comes to risk on assets. Will that change eventually? Of course it will. Of course it will. But in the meantime, we're making money. Meantime, we trail stops, let stuff run. NASDAQ, I'm still long. Russell, I'm also long, which has fallen off here a little bit. It's not on the reading here. I also have a small short position in gold, which I know is going to be kind of an interesting talking point because I have not shorted gold in so very long. I have a very small short position. When I say small, it is truly a very small position, but my thought process is, you know, if it wants to continue to pull back, I think there's some forces at play that could send the dollar actually breaking through this 100 level. Now, I mentioned I took some size off my dollar exposure. I closed profits on my UUP position, but I'm still now short gold. So that's it would kind of benefit from a continued strength in the dollar. Again, when dollar is in momentum, thing could go right on up to 101.5. And if a trade deal is announced, I think we're going to 105, right? No problem whatsoever. If that happens, but that's a big if. We don't know if that's going to happen. Nick, I'm cautiously bullish on gold. Love it. Like, let me express a simple arithmetic prompt. Look at this, by the way. Look at the change. That looks beautiful on the stream. Nice, James. Thanks for setting that up. Yeah, Black Friday is here. We'll talk about that in a second. We're doing space theme. It's my favorite time of year. I love this part of the year. I love the holiday season, Thanksgiving, Halloween. Did everybody have a good Halloween? This year for Halloween, I dressed up as a profitable trader, but now I'm back to being a losing trader. So, you know, one day out of the year, I dress up as a profitable trader every year for one day, and then I go back to work. Just kidding. But yeah, so where was I? I had something going there. Shoot, what was I about to say? Dang, I really had something I was about to say. Anyways, let's just keep going because I got a lot of stuff to get through today. So in terms of moving average heat map, we've got some really strong readings. I don't know. What do you guys think? See, look on this left side. I don't know what to color code this. Like, I'm the UI guy at A1 when it comes to the edge finder. There's a guy who's much smarter than me. He does all the calculations, mathematics. Him and I work together, but he's the brilliance in terms of the programming side. But I'm the UI guy. What do you guys think? Should I keep this like as is, where when all moving averages are bearish or all moving averages are bullish, what color do I make this? Do I change it to be like yellow? Like, let's say you're looking at this, and if you're an edge finder user, weigh in because I need your help on this because I don't know if I like the way that this looks. So like, for example, when there's a mixed moving average reading, it just stays transparent. When everything aligns, though, it goes blue or it goes red. But should it be something else? Yeah, that's my struggle this morning. It's little things, but when you use the tool every single day, the UI really matters because it helps to, yeah. Don't color them. Interesting. Joshua, so you're saying just get rid of all colors and keep this completely transparent regardless of the reading. That's an interesting idea. Well, we'll see. I don't know. Maybe we could leave it to a vote. Anyways, I like this new feature. It's really cool for just like looking at momentum, but like I also added it here. So if you just want to look at one thing, like if you're looking at S&P 500, which we're going to do in a second here, so you can see all four moving averages, the 20, 50, 100, and 200 are all bullish. That gives you a very nice technical screen that just says, hey, this thing is in momentum. And if we take a look at the S&P 500, it is very clear you are in a very strong momentum upward trend, right? In my opinion, dips are buying opportunities until proven otherwise. That is why I am very positioned long stocks. I'm long Bitcoin, which is down here today a little bit, and I'm short gold. So I am super risk on right now. Now, if I'm wrong about that, I'll manage risk. When I say super risk on, I'm not leveraged. I'm just small positions, long risk assets. I don't know if I want to add green and orange to the mix. I feel like green and orange, that's more of a stock box flavor. You're talking about stock box, I'm with you. Like if we pull up stock box, if you're talking about stocks, we've color coded this thing to be sort of a, let me see if I can pull up like earnings report tracker, for example. If the thing wants to load this morning. Like edge finders like blue and pink/red. And then the dark grays. No stocks video this week. Man, OT, I'm trying to keep my content levels up, but I've just been filming way too much recently. So I'm still figuring out what I want to do with that stock channel. I do want to still film and create stock content, but it is just a lot. I do a lot of content creation already. But yeah, so like earnings reports. This I think actually is a quick important point that we should make about US stocks. The mega tech companies that have come out have been really strong. So if I'm looking at Apple, for example, Apple has beat their earnings estimates per share very nicely. Let's take a look at Amazon. Amazon was a monster. I don't know if you guys saw this. Amazon, green is their earnings per share actual versus earnings per share estimate. Huge beat. 25% above expectations. That is substantial. Very strong beat for Amazon. AMD, I don't think they've reported. No, they haven't reported. American Express beat their earnings very nicely. This is good for the consumer outlook. People are spending more money than expected. Now, it may not be the lower end of the consumer. It may just be the higher end. But in the eyes of the market, in terms of economic growth, the stock market doesn't care too much. They just care that the economy is putting out, a lot of credit card spending. And that is definitely taking place. American Express seeing really strong consumer spending here. So yes, we don't necessarily have all the government data recently, but we do have corporate earnings to look at. And corporate earnings have been a really bright spot, really strong corporate earnings compared to expectations. Let's keep going though. I want to also look at like Microsoft, for example. Microsoft beat their earnings. Meta, this one looks like a shocker with a big miss, but this was due to the one-time accounting thing that they accounted for. And I looked into this. I read that if you removed the one-time accounting expense, Meta also beat their earnings per share estimates. So we have, again, if you're going to get super bearish on this market, we've been saying it for a long time. It's the mega tech earnings that need to wobble for this market to wobble, right? If you want to really see the stock market come down, if you want to see large scale pullbacks, barring some sort of geopolitical shocker, like if we get Trump, China going at it once more, right? Yes, that could substantially cause the market to drop, but that would not, that's not something we can see coming. What I think we have in terms of the form of data recently is megatech earnings and corporate earnings in general just rock solid for the U.S. stock market. That's going to continue to support the valuations. This expensive market can get more expensive if stocks continue to kill earnings, and they seemingly are doing that. Can I get Stockbox for free? No, but you can get it for 45% off right now. We're doing a store-wide Black Friday sale. Everything is 45% off. Look, we can't give away our tools for free. Otherwise, these live streams wouldn't exist. There is a business behind everything that we do on this channel, and I will never disguise or try and hide that or act like some sort of, charity here. I love sharing content about trading, but this is also a business. So if you want our tools, if you want to purchase our tools, that is what supports this operation, right? All the, effort that goes into these videos and live streams and the team behind the scenes and all the stuff that we do is supported by the products that we sell. So if you're interested, take advantage of the 45% off discount that is happening right now. It's our biggest discount of the year, by the way. It's our Black Friday discount. We run it through the month of November and give people a chance to, if you need to prep funds or whatever, account for it, whatever you want to do. If you want to pick it up, I know there's a lot of people who wait all year for this opportunity to pick up this discount. So there you go. It is live now. Send us a direct message using the link there. You can also chat with us if it's easier just by scanning the QR code. Just let us know that you are interested in the sale, and you'll be connected with a real person who can kind of be your go-to source for everything about the product that you're interested in. If you want the VIP signals, if you want access to the Edge Finder, the stock box, etc., all of that is available within the Black Friday discount that we're doing. Everything is 45% off. It's the biggest discount we do. Edge Finder's lit. Thank you very much, Jamar. Appreciate it. I saw that you picked up a copy. That's great. Enjoy it, my friend. And yes, I never leave home without it because it's also on my phone. We do have a mobile version. Although the mobile version needs some updating. I don't know if anybody uses it. I need to update that. So we will. Everything always kind of has to get fixed and updated, improved. It's an ongoing development project. So let's see, what else do we have? If I'm looking at NASDAQ, it's going to stay with the NASDAQ bullish idea. We have moving averages that are very well aligned to the upside. We have economic growth that looks bullish. We have inflation data that looks okay relative to expectations. I've seen a lot of people who are concerned about inflation data. They're saying, inflation's on the rise. It is on the rise, but remember where we come from, right? So if I'm looking at inflation, sure, in recent months, we've had an uptick in inflation. But remember, we're talking about a huge improvement to the inflation story long term. Now, if we start to really break the trend, again, we could do some very simple technical analysis here, right? And say, technically, we have had a higher low or we are at an equal high on inflation itself, right? Actually, I guess we are not quite at equal high because this was a 3% CPI. We just had a 3. Okay, so yes, we had a 3% CPI, meeting expectations or meeting prior highs in CPI. This is not the worst case scenario for inflation. Worst case scenario would be if we started to see significant spiking higher. That would be very problematic for the Federal Reserve. They'd have to probably stop cutting interest rates, which would make the dollar very, very strong. If you are looking for a weaker dollar, you want this thing to stay where it is or move lower. But in terms of inflation, we have inflation that's kind of not gone very far in recent times, but it has come a long way from being a huge, huge problem. So we'll see. Will PMI give a big impact to gold today? PMI, as all data, will only give a big impact or give a big move if you're seeking that, Give me that fix of big volatility. It will only cause big volatility if it far exceeds or far under performs what expectations are. So that's, as with all news, right? All economic data, if it's priced, if the market is kind of expecting one thing and we get a huge overshoot or a huge undershoot, that's what would give you a big market move. So we'll see. We have PMI numbers. I believe we have ISM manufacturing PMI numbers coming out in about 40 minutes from now. Could it move the markets? Sure. Is it very likely to cause a very big move? Not really. Not really. Not unless you get a big surprise. It's not usually one that really pushes markets around. Services PMIs typically move the market a little bit more than manufacturing, which I believe we probably get later this week. Stocks continue to push back towards their all-time highs. If we take a look at dollar index continues to push up into this level of resistance. Again, I've been talking about this for some time. We are now at the upper end of this consolidation range. I don't see a ton of clear upside for dollar at this time, but again, we are sitting at resistance in a sideways market. So my bias would be short term. I wouldn't be surprised if we saw some pullback off this, but it really kind of depends on the next round of economic data, what the Fed does, et cetera. So I've made a post about this inside of our VIP group. Let me just share this. Where is it at? Yeah, so I made this post here this morning inside of our group. I just said we made it on DXY. From here, I'm pretty neutral on the dollar. Short-term momentum favors upside, right? Just looking at like a 4-hour. Longer term, however, favors a range-bound environment. Here's your daily chart, right? You can see we're just ranging. Fundamentals look stronger for the U.S. than other places. And this is just, clear, right? Economic growth in the U.S. is considerably stronger than G7 peers. GDP growth and GDP growth projections are much better than places like the UK, places like Europe, etc. Unemployment rate percentage also really strong. You're sitting at 4.2% unemployment. So that's the strong case for the dollar. Like, full stop, very simple. Growth and jobs are much stronger on an absolute basis in the US than they are in other places like Europe, UK, etc. Now, it doesn't mean that the dollar index has to move higher because of this, but this is where I see limited downside in the dollar unless we get to this last prong of this. Ongoing trade negotiations make the USD uncertain. Biggest downside risk, in my opinion, would be a surprise breakdown in trade dynamics with China. That is the tail end. If you want to talk about the dollar index is going to really push lower, it would be if we truly see the trade dynamics fall apart. How likely is that? Incredibly unlikely. Could it happen? Of course, anything can happen. Trading is all probabilities. We never know with certainty. Anybody who says, I know gold is going to do this, I know the stock market's going to do this, I know dollar's going to do this, they're silly, right? Nobody knows with certainty. We're weighing probabilities. That's all we do as traders. Now, you might think, well, actually, the trade negotiations are slightly more likely to break down than Nick thinks. That's a perfectly fine. But if you are like, nope, China and the U.S., the trade dynamics going to break down for sure, I know it, it's not going to end well, right? Because nobody is that certain. If it was that obvious, the market would already be moving. There's people who are much closer to the situation there who know a lot of stuff, and markets would be hearing that through the grapevine, if you will, if it was very, very obvious. So right now, I don't see trade dynamics significantly worsening. If the trade dynamics do continue to improve, however, uncertainty could send the dollar back into the mid 100s. And so that's why I still think, in the intermediate term, you still could see the dollar to continue to rise, because what took us down can also take us back up. Concerns about trade dynamics are sort of behind us, at least in terms of escalation. Escalation is certainly behind us with hindsight so far this year. Now, could things worsen? Of course they could. But do I think that's very likely? No. So I think it's more likely, personally, that trade dynamics between the U.S. and allies improves than not improves. But that's not enough of a reason for me to go out and gung-ho buy the dollar. I like to see more economic data supporting it. And right now, what I have in terms of the US economic heat map is sort of a mixed view for the dollar. Jobs data, not particularly great. We do get ADP this week. Stay tuned for that. That's going to be really important. ADP numbers. NFP we're not going to get because the government is continuing to bicker back and forth about how they're going to spend our money. Waste our money with our tax dollars. But we are not going to get an NFP report. It looks like the government shutdown is going to continue to roll on. I really wish that they would sort that stuff out. There's a lot of people who are, not getting paid because of that. It's a painful situation for, people as those, brilliant people up on Capitol Hill debate back and forth what they're going to do with our money. Where's Ivan? Haven't seen him in a while. He usually comes on Mondays. We'll see if we get him today. I don't do the show coordinating, so it's always a little bit of a surprise when Ivan blesses us with his presence, but we'll see. In terms of NASDAQ, I do want to take a look quickly at the RSI here. So RSI is still sitting kind of overbought territory, not an indication of a selling reading, but rather I was looking for an opportunity to potentially trail stops. I still might trail stops below this area. This area of support, what I noticed, if we go take a look at QQQ, if we take a look here on the 4-hour chart, you can see we gapped up last week, pushed higher, came down, pushed higher, pushed higher. We never even really tested the gap. But if you look at SPY, check this out. So I saw something, shout out to Trade Brigade on YouTube. If anybody watches him, he did a great analysis on this. I watched some of his stuff on the weekends. Believe it or not, I do also watch a lot of trading content myself. But I like his technicals. They're great. So he made a really interesting point that I kind of want to reiterate on my channel, which is he pointed out that if you look at the gap open from last week, big push, right? And what you would have probably expected was that as this market came down, it did sort of look like, okay, we are back in the gap. We should fill this thing, right? We should fill this thing all the way through. But what's interesting is that we came like halfway into this gap period, and then buyers came right in. I thought that was kind of interesting because, again, he made the point that if sellers were really strong here, this is a pretty clear intraday kind of scalp. Now, I'm not a day trader or a scalper, but this is commonplace in short-term trading land. When you get a gap that looks like it's going to fill, once it starts filling, typically it fills. And we didn't even get that. I thought that was a really interesting move here. Like this, right? We had a shoot lower and then a rip back into this area. So it was like a false break into this area and buyers came right in there and they did it a second time. So to me, even the intraday time frame on the S&P 500 still looks really strong. Just kind of an interesting intraday analysis. We're looking at the 4-hour chart from last week. This week, we've gapped open. We'll see if we can just kind of gap and go if we're going to just push right on up through those all-time highs. I do think that from a price action perspective, bulls still seem very strong. Really interesting, though, the way that gap tried to fill and failed out. So let's see. What else do we have? In terms of top setups page, S&P 500, Nikkei, Dow Jones, Chinese stocks. What are Chinese stocks doing today? I saw James, Forex James, comes on the show pretty frequently. I saw him taking or looking at, I'm not sure if he's in or not, a Chinese stock trade ETF, the Hang Seng Index. Could be an interesting play. I actually think, you've got this sort of higher low sequence happening on like the 4-hour chart. I'd be curious to see if you can take out these highs. You're probably going to make a push back towards this previous high. Gold. So I mentioned this. This is probably one of the more interesting things I could talk about today. I did take, for the first time in a long time, a small short position on gold. I'll explain a little bit of the reasoning why. Seasonally, if I show you this really quick, annual seasonality, take a look at gold. From a seasonality perspective, we are kind of looking at a time frame where you do typically see some downside short term in gold prices. Yeah, Nick shorting gold. Who would have thought? Yeah, it's really rare. I haven't taken a short on gold in a very long time. And I will admit this is a very small position in terms of my portfolio. It's not a big one. It's a dipping. I called it. Let me see if I can show you the trade alert. If I go commodity trade. So here's my gold signal this morning. So I sent this morning inside of the group. Technical momentum seems to have shifted in favor of the downside in the short term. 4-hour and daily momentum changing to bearish for now. Stops above structure. Small short position with a tight stop. Dipping my feet. That's what it is really not a big position. In terms of the account that I'm trading on, it's not a huge trade. And it's a quick loss if it doesn't work out. Looking for price to continue to fade lower to long-term levels of support at the 100 to 200 day moving average. It's a 4-hour resistance level, lower lows, lower highs. And I have to be careful with this because my goodness, I made this post and it's like all the gold bulls were so upset at me, saying, how dare you short basically. And you have to understand, like long-term, I'm a believer in holding precious metals in my portfolio. I have, quite a good bit of long-term kind of positions in the gold and silver world. But short-term, I think you do have a little bit of downside. And if I'm wrong, I'll take a small loss. If I'm right, I'll try and see if I can turn it into a decent winner. But yeah, I think you have seasonality that favors downside. I think you have a risk on market that just doesn't want to quit. And I think fighting it is just a really difficult play. Always. Doesn't matter what I say. But it's understandable. Trading is there's always, look, we all have trades that go well, trades that go wrong, and it is emotional for everyone, right? It's trading 101 is like people are very emotional. They put huge risk on their trades, and when it doesn't go right, they're very upset. And it's unfortunately part of the game that we play here. Nick, look at Amazon opened up. No, it didn't. Did it really? Oh, heck yes. Amazon to the moon, baby. Look at Amazon. My goodness. I didn't see that this morning in the pre-market. Was it up that much? Yes, it was. No, it wasn't. Did it just make that move? Yes, it did. Amazon's just going for it here. New all-time high. Let's go, Amazon. Love to see it. What else is moving? Stock world. U.S. stock market just opened up 2 minutes ago. Robinhood making a move. Uber. Amazon, baby, let's go. Look at Amazon. Tesla, come on, do it too. Spotify. Elf on a Shelf, as Financial Education Jeremy says. Anybody watch Jeremy, Financial Education? I really like his channel. I've watched him for probably a decade. Not even kidding. I think I've actually watched his channel for a decade. Anyways, yeah, stocks seem to be going for it. Dragging the NASDAQ higher here. Yeah, I'm looking for a chance to trail and continue to ride this one. Let's see what happens with gold today. Bitcoin not going so hot. I have a long position on Bitcoin. It was up 3 days in a row and then wiped it out here today. Such is the way it goes. Crypto has been an interesting space. Stupid 7 companies dragging the market higher. You mean 7,000 companies ball out. It's not 7 companies. 7,000. Why? Because the Magnificent 7 buy tons and tons of smaller companies as they rise. So they're really like conglomerates. Like Amazon, for example, this stock is not really one company. I mean, it is on paper, but under the surface, they have bought so many companies. It's so many. it's like a whole economy in itself. That's why, sometimes I know I get the argument like, oh, it's only a couple companies. I get that, but it's not. It's many, many, many companies that have been bought and accumulated by a conglomerate that sort of owns the whole thing. So it's like 7,000 companies in 7 tickers. Not actually 1,000 each, but a lot. They buy so many companies. You can pull that stuff up. They buy so many companies. Anyways, guys, we've got our next show host taking over. Look at that. Amazon just going for it. My goodness. Up next, we've got Ivan FX. Remember, guys, if you want access to the Edge Finder, it is currently on super sale right now. It's on 45% off discount. If you want some information about the Edge Finder discount, the Black Friday sale is live. We just kicked it off. Scan the QR code below my screen here, or hit the link that just got dropped in the live stream chat by the producer. Take advantage of that discount by sending us a direct message, and you can get access at the lowest price of the year. Edge Finder, Stockbox, VIP group, whatever you're interested in, our team is on standby to help get access for you to the lowest prices that we do all year long. So if you've been in the sidelines waiting for a chance, there it is. Click that link. Let us know you're interested, and we'll get you set up with whatever you need. All right, guys, up next, Ivan FX, just after this.
Get over here. Come here. A little closer. Come here. Gotcha.
I have to be very, very, very honest with you. I did not see these dollars going higher coming before it actually happened. And that's just part of trading. The ad is pretty funny, I would argue. So going on for this week, seemingly has to be the dollar strength. And what is kind of just as important as that is, where are we going? We are currently at 100. I would really love for this one to fall. And we are coming into levels of resistance. Yesterday, I was like thinking, what if we come down to 99? That would be a great place, one, to short down to 99 and then take it back high if you wanted to do that. But it doesn't seem like the market even agreed. So, that's that. So what's driving it? Yeah, DXY to 95. Yeah, I mean, that would be lovely. The current driver seemingly would be the disappointment of Fed, and the Fed actually not following through on what they said was they are not going to hide. They're not going to cut. That kind of puts the market in a bit of a weird scenario where what do we do now? As Andreas says, pound. And I'm not an expert in this situation, but if somebody can tell me from some years ago when the pound had a equal opportunity to absolutely get smashed down the toilet by what's coming now, because on 19th of November, in about 2.5 weeks, we have the budget where the new government, so to speak, are going to present their, as far as I know, their first budget or second budget, where they are going to likely put in a lot of taxes, because it's a socialist labor party. If they survive said budget negotiations, and when publishing it, it's not going to look good for the pound. And Andreas says pound dollar pullback, and I absolutely agree that we need to look for a pullback. But in my world, is there a pullback? Would there be a pullback? And can we catch it? So with dollar strength at the same time, with pound weakness coming in now, being priced in before said budget, it's kind of like I don't know, weird situation where Ivan, you should have known this before. And then I was sadly reminded yesterday that we had a discussion about shorting pound about here. But I wasn't a part of that. I wasn't encouraging that discussion. It's probably more, somewhere in these peaks here. And the person that I'm talking about is Maxi. Maxi said he wanted to short it and has stayed in the trade ever since. And I applaud him for that. But I was thinking, what if I can buy 133? And evidently, I was horribly wrong about that. But that was a trade idea that didn't come to fruition, and I didn't do anything about. So in that situation, is the train gone? That, in my books, is yes. And then we go back to what do I normally say? Learn from your mistakes. So, and then the other question begs the question is, how long is his dollar strength going to last? And that could last some time. It kind of depends. When market decides to do everything in one go, it just goes. And that also has an effect on gold. Now, that entirely hasn't been the reason why it has peaked, so far at least. But it puts a damper on it. And then, for that matter, oil. Oil, generally speaking, has a weak seasonality at the moment, going in to be stronger. With a higher inflation in the United States, a higher demand, and for that matter also now also higher supply, confirmed supply from OPEC. With winter season coming in, you are more likely, not necessarily today, but you're likely to see this one go higher. Why did I mention that in that same go? Because all drivers are dependent on whatever dollar does. That also puts the Australian dollar under pressure. And in as much as I would love to have sold this one and said, hey, I think this is going to go lower, that was never my idea. So can't do anything there. And second of all, would you sell here, Ivan? And the answer is no. The answer is very much no. My data set says I should be here. So that means that should break higher to go into here. Also means that I can, in my data set, look for something like this for tomorrow. But then again, I would be on the third pullback. And everyone who knows my third pullback, that's generally speaking nothing better than just 50-50. For S&P 500 opening up, there was a small gap on the futures, and I really want this one to have the greatest pullback that the greatest pullback can ever do. I don't know who it was or where I saw it. It doesn't really matter. But somebody was talking about that the AI bubble is coming, and it will be the greatest thing we've ever seen, and nobody will be prepared for it. And if that is coming, sorry, Nick, I would be thrilled for this one to come lower. But in the meantime, not financial advice whatsoever intended. But this is like that's like a micro support. So unless we break 6,800, then I want to be looking into it at least. Same thing for Nasdaq, bullish going in from now. And what I said earlier, I don't know when I said it. When did I say it? I said it probably, doesn't really matter, June, July, August, September, October, is that now, which happened in October, is what I believe to be the bottom until next year. I really want a bigger pullback. I did not buy this pullback. I did not buy that pullback. But now it looks very much like a lunatic who didn't take it. Yes, Marco is next. And for me, that doesn't hurt me. It doesn't really bother me. But I really want slightly and a better entry before I take my trade. That being said, for those who are bothered about my pivot points, the central level is about 25,400, like last month. So if that could be the place and the level that we can be looking into, then that's where I'll be looking into. So I'll put up a limit, an alert, and then we can see if we can get down there. But that would be a scalp, if anything. Coming back to Euro, New Zealand. New Zealand is currently seeming to have a bit of a difficult day. I am still interested. I haven't sold it yet, but I'm still interested in selling Euro New Zealand going at least until the end of this week. But it doesn't help me that New Zealand dollar US dollar is making a new lower low. So right now, this Euro New Zealand trade would then be just a difference in weakness and strength between the Euro and New Zealand, which is turning out to be not at all a great situation to be in. And then you guys are mentioning S&P Global Manufacturing PMI 52.5 versus 52.2 expectations. Yeah, right now there is ISM in a couple of minutes though. I haven't seen S&P Global, but maybe there is. We have Niconomist, we have Pulverizer, Mark Otako. What's Ivan's name? Yen Man. That has been at least my name for as long as I know, at least. But okay. Yeah, ISM services in a couple of minutes. For 13 minutes, sorry, manufacturing. But then again, just for everyone to note, is that manufacturing, US manufacturing of GDP is only 9% of GDP. So in as much as it's important for manufacturing per se, it has a lower significance for GDP in total and the economy, therefore also the economy in total. So yes, this is okay to look at, but I would rather be very much more interested in, number one, S&P Global's manufacturing PMI, because they are closer to the US and they have a higher percentage of how close they are to GDP versus ISM. And I think ISM, there's one who is more into US companies and the other one is more international. And I believe this one is more international. So has more international companies in their data set. Therefore, it doesn't become a true 100% on what Americans does. So there is that. You're welcome. Yeah, even your cars is produced in Mexico. Yeah, but it what started it. So I'm just, when I start out as a trader, when I look at manufacturing and PMI, and I'm young, I see them equally weighted. So my point there is just to make sure that you understand it doesn't really have that much weight, and there's a reason for why it doesn't have that much weight, and then we can take it from there, right? So yeah. So I really want to short Euro New Zealand, but right now I'm a chicken. Chicken. What's my thought on yen pairs? If this doesn't create fear in me, then I don't know what creates fear in me. Okay, so a couple of items along the way here. Okay, number one, we are beginning of the month. Beginning of the month is always going to be the pricing end. Number two, we are high. We are very far away from the beginning. We are 300 pips away too far. Okay. So in my head, make a lower low, continue a lower, come back down to this level, and then buy it again. And I said a reference yesterday. Nobody laughed at me though. But I said yen pairs are so hard that even Snoop Dogg would be jealous. What is your thoughts on the US quantitative easing? America doing quantitative easing? Then no. That's too far away from that. Switzerland, on the other hand. Thank you, Ballout. Yes, it's on purpose. It's called High on Life. But now Switzerland is by far has, well, I don't know, did they have their consumer price index, the CPI this morning? As far as I know, they should have. And yeah, this one needs help. This is the one that needs help. 0.1 inflation over 1 year, and month-over-month -3, expected -1. Last time was -2. So yeah, absolutely, Switzerland needs quantitative easing. America does not need. Why does America not need quantitative easing? Because when you look at Edgefinder, you look at the US economy and you look at their inflation. Inflation is 3. So if your goal is 2% and they're currently giving you 3, then you're 1% above your target. And if this one to make any sense at all, this should be about 1.8 or lower for this number here to be making any financial sense. And I just lost my. There we go. Thank you. So going back to yen pairs. So there were maybe my stance from yesterday has changed a bit in terms of selling the short-term bullishness, and then looking for it to continue. And then if it continues higher, then yeah, like become a bit more reactive to the actual market, because yen pairs for November, even though I am yen bearish, I acknowledge that the Bank of Japan should be even closer than ever to do another hike. There was what they call in English the discernment in their latest meeting, where there was dissent, probably is the word, where two was hoping for, two people was hoping for a rate hike, and the next day, then Tokyo inflation comes out at even higher than expected, 0.3 higher. So you can definitely argue that point. Is that recently Windows 10, lol? Yeah, what do you mean? It's not like it's Windows XP either. Daniel says, gold is going crazy right now. What do you mean? Okay. There's a difference between me and you here, and you're probably not going to listen to me after this, but I'll take the shot. I'm waiting for it to break 44,050. Until then, I'm not interested. Why so, sir? Because we are currently in a range, and whatever happens. Until then, I cannot listen to it. Now, the thing is about me or generally speaking about range trading, is that this generally tends to happen. And when this kind of market situations happens, I'm not even bothered. Okay. So to me, I'll just wait. I'll wait. So I need gold to trend. I don't think it's trending right now. Well, it can, and you can say, okay, I see. It looks very much is going to go higher. Yeah, that I can agree on. But until then, what is it called? Calm as a cat. Calm as a cat. Yeah, I mean, good on wallet. Okay. Okay. So, two things at the same time. So, Aussie is falling, CAD is falling, Swiss yen is falling, Euro yen is falling, Pound yen is falling, New Zealand yen is falling, Dollar yen is falling. No. Oh. Northern Europe. It's where the Navy has barcodes on the side of the ship. UJ gonna fall? Yeah, I would love for UJ to fall. Wouldn't be too far off then. But so let's talk about a couple of things here about the end pairs, and my view here is that I love this fall. I love falls. Why? Well, I then can be like, I don't need to do anything. Great. But more importantly, the higher the market goes, the more I get stressed. Like, if you would have my my heart monitor, the higher it goes, the higher my heart rate goes, and the lower it goes, the more I get to relax. Because where's the peak going to be? We're going to take our profit. And if we go quickly higher, I'll be like, in my world, a professional trader is the one that's worried about take profit, not the stop loss. And I couldn't care less about where my stop loss is. Why? Because it's just an avoidance of having more unnecessary losses. When it falls, it's gonna fall. When it falls, it's going to fall. Not getting trapped up there. Yeah, I'm not buying dollar yen. But it looks like a flag or a pennant, whatever it's called. But yeah, no. So back to euro yen. I would really love to buy euro yen, and if I can wait a couple of days later, a couple of days lower, if I spend a Monday and a Tuesday and a Wednesday and a Thursday and a Friday, just for me to stay bullish rest of the month, then I'll do that. So I don't have any trade history. I don't have any trades on right here on euro yen, euro New Zealand. Nah, I don't like it. I don't know why. No. Do you know what, sir? I'm going back to basic trading. That's basic trading. That or nothing. Because we're going into a range now, so I need to protect myself. So that's just the management of risk. Secondly, it is brand new lower low on New Zealand dollar. By the way, when you're looking at this market, I would say that that break there was the warning. There's your sell. Everyone can see that. But that also means that this sell, in my world, no, can't sell there. So that it was only that situation. How does that affect my Euro New Zealand trade? This has to go higher, continue higher, for me to be looking into Euro New Zealand going lower. So since that one is failing, and then Euro, well, Euro is doing whatever Euro does, but I need a strong New Zealand dollar, US dollar. And then until I have that, I'll just leave it alone. Black flips. All right. For those who knows me, I'm also the mentor here at A1. So if you do need help, 1-to-1, free, 1 hour, please find me on the internet, on Discord, on my YouTube channel, whatever, wherever you find me, so that you can get your 1 hour help from me. I would really love that to happen. That's why I'm here. I'm not here to sell you anything. So I love. That's what I love. That's what gives me energy. That's what gives me the willingness to trade, is to talk to other traders and see where you can improve, so that you also become a better trader at the end of the day. And until next time, I wish you all the best. Boom.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. Hope you're having a good Monday. I know it's not a busy one in terms of the news, in terms of the markets, but we should prepare. Or is it Tuesday today? No, it's Monday. I got my days mixed up. Yeah, so Monday, I'm watching a couple of pairs. I'm watching Euro GP, UJ, USD CAD, Euro CAD, the NASDAQ, gold, silver. So I'm watching all of those for potential entries. We do have, if you check the calendar this week, we do have 2, I would say, pretty important events. First one, Aussie cash rate. So we're going to see the cash rate. And then we have the Bank of England bank rate. Okay, so Bank of England bank rate should be pretty important as well. So these 2 events should be pretty important, right? Anyways, I'm looking at them, and I'm also looking potentially if the US government shutdown will end. So I think this is like the 3rd or 4th week that the US government shutdown is continuing. If you look at some earlier statistics, let's say, shutdowns, they usually last for 1-2 weeks. I think the biggest one in the last 5 years was 35 days. So we're approaching that 35-day mark. And if history repeats itself, well, then we should be pretty close to ending the shutdown. So I'm watching that. I'm seeing if the shutdown will finally end. And then we may actually get an NFP print, right? What is still coming out is we still have the ADP non-farm employment change. So it's coming out weekly, which is great because it should give us a nice idea of what the NFP is doing. So last week, I think we got the ADP on Wednesday. If it comes out weekly, it should have been there. Why is it not here? Anyways, maybe the week before. Yeah. So looks like this week it's going to happen. And again, they have started, apparently, that's what I've read, they started to release ADP numbers weekly, which is, I think, to counter the no NFP situation, right? And also, during the stream, probably in like 10 minutes, 15 minutes, I will be giving away one 25K one phase DNA funded challenge for free. So the fastest hands and the fastest eyes will get a free challenge. Stay tuned and wait for the code. I will release the code. I'll type it in my trading view, and then you will be able to redeem it. Do not redeem. I'm just kidding. Redeem it. So euro dollar is on my list. I'm watching it. I've been doing some research. I like the dollar. I am potentially actually looking to sell euro dollar, sell GBP USD as well. It is on the radar, but I'm not going to go into it too much here. I'm probably going to make a post. If I, of course, decide to take a trade, I will make a post in the A1 Discord. So the big movers for the day: S&P is down, Nasdaq is up, gold and silver are up, but they are struggling. I would say they're pulling back. I know Nick recently sold gold, if I'm not mistaken. I think I caught that. I mean, I didn't take it, but it was a definite signal. So let's start with the first one. Which is going to be the Nasdaq. With the Nasdaq, I mean, I'm of course looking for buy setups. You're not going to see me try and short this massive explosion. It's not going to be me. But I'm also not going to buy all-time highs. I'm not going to buy here where I personally think the price is a bit overextended. So I would personally say the price is a bit overextended. It is above the 20 MA. So I would like to get a pullback, maybe something like this, maybe another taco trade. Of course, to get a pullback, we need to see a catalyst. A catalyst could be Trump going crazy. So Trump announcing crazy tariffs or saying, the deal with China is done. They're getting 150% tariff. I think it could work again. I think the markets have not learned from the last time to just ignore what Trump is saying. So fingers crossed that we get a crazy Trump tweet and that the market drops again. That would be definitely a powerful catalyst. You can let me know in the chat if you're trading the taco setups. The only taco trade that I have caught personally was not really a trade. It was a long-term investment. So I kept buying into this dip. Okay, I bought 3 times and the payoff is pretty nice. I'm doing pretty well on these investments. Actually, for 2025, my investments currently have a better return than my trading results. So I got pretty lucky with buying the dip, and also I have a Bitcoin long and Ethereum long. Both are doing pretty well. Crypto is just to look at crypto quickly. So Bitcoin, I know there was a possible Trump trade, taco trade on Bitcoin, but Bitcoin never recovered. Okay, so looks like Bitcoin never recovered from the lows. It's still trying to go even lower. Ethereum pretty much doing the same thing. Doesn't look the best. So not the most healthy chart. I'm personally not looking to buy it. I have an alert set. I would much rather see Bitcoin go into the all-time highs. Okay, so I would much rather see Bitcoin climb higher like this, push out into all-time highs, and then I would consider some buy setups on Bitcoin, right? So yeah, I don't really think that this is a nice area to buy, if I'm being honest. I'm not expecting a lot more upside. It looks to be a bit stagnating here in the bottom of the range. We are now in the bad period of the halving cycle. So if you follow crypto, you would know that the halving cycle is a big reason why Bitcoin goes up or down. And we are now in the point in the halving cycle where Bitcoin remains a bit flat, remains a bit range bound. So that's an added confluence for me to be more patient. Also, last time there was a dip on the NASDAQ, Bitcoin went down first. So I think it was here in January. Just let me see this. Okay. Anyways, here in January, Bitcoin actually heavily dropped, and then NASDAQ followed soon after, I think. So Bitcoin could be a leader in sort of the leader in the sell-off. Yeah. So the NASDAQ dropped in February, which could be happening again. Bitcoin dropping off. See, if we just load, what the hell, TradingView? It's Monday. Why are you slow? So see, Bitcoin sold off while the NASDAQ keeps on trucking. So that's something I'm looking into as well. Could Bitcoin be used as a leader, as a leading indicator to anticipate pullbacks on the NASDAQ? Maybe. Just the summary right now on crypto, not that interesting. Looks flat, looks corrective, a bad time of the halving cycle. So I'm being more patient. The NASDAQ pretty much covered it, so I'm looking for pullbacks. I don't want to buy this price. I want to get in on a possibly a cheaper price, a bit of a discount. So possibly, let's say this support level, that would have been better in my opinion. And then I can aim for the highs. So if I do manage to get in here, tight stop, aim for the highs, could be a nice setup, could be a nice trade. Gold and silver. If you have been following my streams from the last week, you would know that I was looking for an ABC correction pullback. Yes, Elliott waves. I know it's a bunch of astrology for men. I know it's a bunch of mumbo jumbo, but just something to mention. So the markets usually correct in 3 waves. First one, so A, B, C. Usually you don't just get one wave lower and then price goes up. Usually it's 3 waves. I believe we have now sort of printed the first, second, and the third wave. So we had quite a nice correction. I would actually consider possible buy setups at these levels on gold and silver. But of course, I'm not going to blindly buy. I'm going to wait for a confirmation of the Edge Finder. So Edge Finder, top setups. Let's see. Gold. I think it's neutral. Yeah, neutral reading. Silver. Neutral. So I don't really have a massive fundamental reason to buy. I don't really have that confluence from the Edge Finder, which is what I'm looking for. That means I shall remain more patient. We tried to push into 3.9, couldn't do it. We are now staying around 4,000 for gold. Interesting price action, definitely interesting price action on gold and on silver. I don't want to buy here. I don't want to buy unless I have a pretty strong, clear reason to buy. I know I also told you I'll be getting in on a feeler trade. I'll get in at these support levels, let's say, but I really strongly believe I want to get the fundamental confirmation or an Edge Finder confirmation to go in, right? That is the game plan. So now it is time for me to give away a DNA funded challenge. So 25K, one phase, just go to the DNA website, promo code, put in the code, and you'll get a free challenge. If everyone is ready, I'll copy it from my document and I'll paste it in my TradingView in 3, 2, 1, 0.8, 0.5, and here it is. Okay, so this is the code. You can copy it. If anyone does manage to redeem it, let me know in the comment section. Say do not redeem. Okay, if you manage to redeem the code, say do not redeem. Okay. Taco Marco, are you still in UJ? Yes, I will show you that trade a bit later. I'm still in. Hey Sluggy, what's up? Joshua, I'm doing pretty well. How are you, Sluggy? Wednesday, New Zealand NFP, Friday, CAD NFP. Yes, should be pretty important events. Thank you for pointing those out. Most high, are you the highest? Hey guys, I'm new here. Hello, so welcome. GBPUSD halted its decline with this PMI. We may see a correction down to, I'm bearish on GBPUSD. How does this giveaway work? So essentially, at let's say half of the stream, at half of my segment, I give you a code. As you can see on screen, you take the code, go to DNA funded, 25K, one phase challenge, put in the code, get a free challenge. Crypto is do, currency is DAO, gold intraday do. Well, I think buying the dollar is pretty good. So I would say the dollar is pretty alive and kicking. Hi, Marco. Any opinion on the meta dip? Meta dip. Let's see. Meta. Let's see. I mean, this whole AI shenanigans, it may be coming to an end. So you used to see a reaction when someone partnered with OpenAI, the stock price of that specific company would explode. And as more and more companies kept partnering with OpenAI, the reaction to their stock price was less and less. So you have diminishing returns in AI. AI is, of course, a bubble. So it's going to be a bubble. It's going to explode. It's going to pop. When? No one knows. So best thing to do is buy until the, let's say, bend at the end of the trend. So buy the trend until the bend at the end. If you just anticipate the highs, if you anticipate a crash every single day, you will lose money every single day. So I know the biggest stock bear, one of the biggest, is Robert Kiyosaki, who has a book, Rich Dad, Poor Dad. The book is great. He is a bit of a scammer, if I'm being honest. And he's always bearish the stock market. And every time he goes bearish, the stock market actually goes up. So that's pretty funny. Again, so perma bears, they don't make any money. They get a lot of clicks. Perma bulls, well, perma bulls make a lot more money. But if you can be neutral and if you can just follow the trend, you're going to make the most money. And you're going to get the least amount of clicks because you're never going to have a contrarian opinion. But are clicks really important? I think percentage is much more important than clicks if you're a real trader. So the meta dip, I think it's just artificial intelligence diminishing returns. I think the story is getting stale. I think the bubble could be close to popping. Maybe, not sure. I'm not the one to call the top, but I am the one to be maybe more patient. If I see some warning signs, that means I won't buy. That means I'll stay on the sidelines. Now is a good time to buy. These guys are too fast. Oh, congratulations. So Sluggy won the 25K. Congratulations, Sluggy. And he had the fastest hands. So Nick says, Slug, you're collecting these things like Infinity Stones. I think this is his second one. Almost seems like I'm sending him the code before I paste it here, which is, of course, not true. Or is it? Anyway, that's what she said. Hey, Sluggy, what bot are you using for? So Sluggy has a bot programmed. This game is not fair. No one has the same computer delay. You can have 3 seconds on the live more than others. I'm not sure about that. I've never studied programming or like computer science, so I'm not sure, but there has been multiple winners so far. So we've done quite a lot of these giveaways, and Sluggy won 2 of them, but there's quite a lot of other traders who won other challenges. So yeah. GAN is much better than Elliott waves. Never heard about. I mean, I heard about it, but I don't know anything about it. Complain with your internet company. Yeah, maybe. So let's get back to the charts. Let me show you my trades. UJ, USD CAD. Okay, let's just wait for it to load. UJ, USD CAD. Is your guys' trading view lagging like this? Is it just me? On some days it lags quite a lot. I don't know why. So USD CAD, Euro CAD is in drawdown. But anyways, let's continue with the overall watch list. Now you know my general game plan on gold and silver. It is to wait for the confirmation from the Edge Finder. A currency pair that I like is the Euro GBP. So I have set an alert at around 0.87592. We have finally pushed out of it. I'm bullish on the euro, or at least I was bullish on the euro. I have done some recent research that is not so great for the euro, so I'm kind of reconsidering. For the pound, I'm definitely bearish. Something I am considering is to get in on a buy setup. The only problem is, so long-term data is okay. Long-term data is really bad for the pound, but short-term data does not seem to be working. So for the euro, it's 50%. For the UK, it's 57%. So it's not working in my favor. That's what I wanted to say. What I would like to see is in the economic heat maps, UK economic heat map, I would like to see this reading be red. So I would like to see most of the short-term data coming out in the UK become bearish, become red. That would be a great reason for me to buy Euro GBP. So technical analysis looks good. I would say long-term fundamental data looks good. Technical analysis looks good. Just the short-term data that I need in this particular example is not there. So being more patient, okay? And I do want to take this moment to talk about the sponsor of today's stream. That would be DNA Funded. So we just did a challenge giveaway, but if you guys are looking to expand your trading capital, get more funding, get more capital, it's, I would say, the second biggest problem of retail traders. First, unrealistic expectations. Second, they don't have a trading edge. And I mean, they really don't have a trading edge. And the third one, they have very little capital. So you need a lot of capital, because if you make 10, 20, 30% per year, which is achievable, 100% per year is crazy. 20 to 30% per year is achievable. But if you make 20 to 30 on 5K, you're not going to feel it. If you make 20 to 30 on 100K, it's going to be nice. So if you want to expand your trading capital, DNA Funded, reliable firm, and you can get a 25% off discount with the code A1Live. So specifically for you guys watching the streams, 25% off, A1Live, any challenge. By the way, this is my personal challenge where I'm testing ChatGPT trade signals. Currently, euro dollar sell open, running in profit, SPX buy, running in drawdown, but the equity is okay. So we're up plus 5.21%, close to the phase one target. Phase one target is 10%. So far, so good. We have been break even for quite a while, but now starting to make some profit. So hopefully, maybe by the end of November, I can hit the phase one target. Anyways, DNA Funded, great prop firm with a great price because we have a 25% off code. Continuing with the regularly scheduled program, Euro GBP, I told you my game plan. UJ is close to the take profit, okay? Very close to the take profit. I have moved my stop to break even though. So the stop loss was initially at 149.948. Now it's around break even. We had quite an explosion to the upside. We had a hawkish cut from Powell. I always love hawkish cuts. I think hawkish cuts produce the best bullish movement on the US dollar because everyone thinks they're going to cut. Everyone is expecting a rate cut, and then they actually do have a rate cut. But Powell says, inflation is tricky. I'm not sure about December. We will have to see. We're in the wait and see mode. And then the markets go up like crazy. So essentially, that is exactly what happened last week on Wednesday. That is exactly what happened on the 17th of September. I love hawkish cuts. They work so well. It's a great trading edge to have, right? And it's not going to work forever. Maybe once Powell is gone, the approach will change because maybe then they will just announce everything before the actual press conference, or they will just do a dovish cut, right? Not sure. right now, hawkish cuts do work, and I do expect more of them to happen. Same with the taco trade. I would actually love to see another taco trade. If you go to the Fed Watch tool, something I want to show you. For December, rate cut actually climbing higher. It was around 90%, even more. It was pretty much guaranteed. Then you had Powell, Daddy Powell, coming in with a hawkish cut. This thing dropped to 60%. Now it's 70% and rising. So December cut, not 100% certain. I think it's going to happen, but there is a big chance we get another hawkish cut. And I think the DXY could very easily continue going up. My bets are, of course, in place. UJ buy, USD CAD buy, DXY. Let me show you. So the DXY is around this swing high, right there. I think we could go a bit higher. The problem is we're approaching the psychological mark, which is 100. So we could see a bit of selling, we could see a bit of resistance, but I think we can go higher. I think the bottom is in for the dollar. I think the bottom right here is in, especially for 2025. I don't think we're going to crash lower than 96, let's say 96.5. And I just see the situation. I see the US is doing well. GDP is nice. GDP is positive. AI spending, Santa rally incoming. November and December are the best months to be long US stocks. Just look at the seasonality. S&P, November, December. Look at USD JPY. November, December, positive. Look at this. See? Look at USD CAD. November and December, very positive months. So just an explosion in the year's end. Again, be aware to buy US stocks, you need US dollars. So how the money flows is it flows first into the US dollar and then it goes into US stocks. The more stocks go up, the more the dollar should in theory go up. You know, it's an added bonus. It's an added extra confluence that the dollar usually follows the Santa rally. So as the Santa rally goes up in stocks, the dollar does follow suit. One thing that is no longer present is the corporate buying of US dollars, which happens in the year's end, right? So in the year's or month's end, usually at the end of the month, big corporations, they buy loads of US dollars, makes the DXY go up. My case in point is this move. See, from Wednesday to now. Big move to the upside. Corporate buying. See? Also, could we find it in September? Well, September, not so much if I'm being honest. Usually it works. If you ask ChatGPT, just say, ChatGPT, give me an analysis. In the last 5 days of the month, does the DXY usually end up positive or does the DXY usually end up negative? Another good filter is only filter for those months where the S&P and the NASDAQ have gone up by more than 3 or 4%, because then there's been a lot of good activity. The companies made a lot of money. Companies are growing. Also, people are buying the US stocks. That's a good filter, a good extra filter to have when backtesting this phenomenon. Again, another trading edge. That is the third one so far. We talked about the Trump trade, the taco trade. That's your first trading edge. We talked about the hawkish cut from Powell, second trading edge. We're talking about now corporate buying of US dollars into the month's end. That's your third trading edge. You can assemble a pretty nice story with just these three parts. If you add in some more, if you add in the edge finder, well, you get a pretty solid story. If you add in seasonality from the edge finder, that's awesome. Santa rally is really powerful. Okay, I'm not sure if there's been there's been very little years where the Santa rally did not work. Why? Well, because I think Nick talked about it. I heard it from Nick in his video. So he said a lot of money managers are having Christmas parties and they don't want to talk with clients and say, I'm not that heavily exposed into the US stock market. They definitely want to say to their clients, I'm in the US stock market. Yes, I'm in the Santa rally. Yes, we made money in November and December. Enjoy your Christmas. Usually how it goes. So it's all people behind the markets. It's all people. It's all psychology. And once you spend some time in the markets, you start to notice general patterns and how things work. So yeah, we mentioned the DNA Funded, the sponsor of today's video. Edge Finder, by the way, if you want to get the Edge Finder or join the A1 Discord, get the trade signals. UJ was a trade signal. USD CAD is a trade signal. Euro CAD is a trade signal. Great trades, in my opinion. You can do so. You can join us with a nice discount, which is MARKO. See, 45% off discount. Massive discount. I think the biggest discount for the year. So take advantage. Do join, and we can develop trade ideas together. Let me see the comments. Let's see. Euro Swiss. Okay. Heading into yen intervention area, yes, but not close yet. I would say the intervention area is around 156, 157, 158. That is the area when you could start hear some rumors, hear some talks from the BOJ saying the exchange rate of UJ is a bit too high. We're considering this, we're considering that. So not yet definitive intervention, but they are worried about it. So essentially they are signaling to the market, look, we are worried about the UJ exchange rate. And I think that sort of talk starts to appear around 156, 157, 158. So I have a tactical stop loss in at 154.86. I want to be out before we reach those crucial intervention talk levels. Marco, I'll share my profits with you on the account. That was the deal, right? Just kidding. What is your edge in this market, Marco? I just told you I have many edges. So many market edges. The three that I talked about in this stream are taco trade, hawkish cut from Powell, corporate buying of US dollars into the month's end. Those are all trading edges. Edge Finder seasonality. That's the fourth one we talked about today. There's so many ways to make money. There's so many opportunities. You just need to do the research. You just need to sit down and make moves and make decisions, not just sit on your hands and watch the screen. You actually need to click the button and put in real money, right? And that's tough. It's tough to put actual money behind your trade ideas. It's not easy. You need to have a lot of confidence to do it. Confidence in yourself, confidence in your analysis, confidence that even if you do lose money, you are still right to take the trade. Joshua says, if there's another giveaway, I'm winning it. Okay, so there will be another giveaway tomorrow. I still have a couple of accounts to give away, so make sure to join tomorrow, and the fastest hands will catch the free challenge. Admission of insider trading. We didn't admit anything. BTC going south. BTC not doing so well. Yes, I would say BTC is looking pretty problematic. Oh my. Damn. So quite a big push lower. Ethereum, even bigger one. So crypto, not so great. I told you about the halving cycle. Do some research. See in which part of the halving cycle we are currently at. We are not in the best part. So that's an extra confluence to not do anything, meaning not buy Bitcoin, in my personal opinion. Is it too late to enter this trade? I would say for UJ, for USDN, definitely. For USD CAD, I would just get in on pullbacks. My favorite trade, this is going to be the last thing for today. My favorite trade for 2025 is going to be USD CAD catching the dips. I already caught a nice winner right there. It was, of course, part of the A1 Discord trade signals. And now this is, I took a loss. And now we're running some nice profit with the second position. Almost got taken out though. So maybe I got lucky on this one. But My recommendation, not financial advice, but my recommendation is just to buy the dips, buy it around the 20 MA, buy the dips, and this thing should fundamentally continue going higher. That is about it. Thank you very much for watching. If you want to participate in the giveaway, there will be a giveaway tomorrow. Okay, somewhere in the middle of the stream, I will go ahead and give you the code to get a free challenge. Thank you again very much for watching. Have a great rest of the week, and I will see you in the next one.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.